Warm welcome to all our fellow investors. Today, we are deep diving into a real Bazigar of the Indian power sector, Hitachi Energy India Ltd, or Power India as we call it on the bourses. As India races towards its net zero goals, this company is sitting right in the sweet spot. We aren't just talking about bulbs and fans here. We are talking about the massive backbone of our nation's electricity. With the government's push for 500 gigawatt of non-fossil fuel capacity by 2030, the scope for growth is simply suburbous. Whether you are a seasoned HNI or a young professional looking for the next multi-bagger, understanding Hitachi's role in our energy transition is absolutely crucial. So, let's get cracking and see if this stock deserves a place in your portfolio. Now, let's talk about the Khandan, or the pedigree. Hitachi Energy India was formerly known as ABB Power Products and Systems India. They carry a legacy of over 70 years in our country. With around 80% of their products being locally manufactured, they are the poster child for Atmanirbhar Bharat. They operate 19 manufacturing locations across India. This isn't just a trading company, they are core manufacturers. This deep local rooting gives them a massive edge over global competitors when it comes to cost and execution. When you invest in Power India, you are essentially betting on the engineering excellence of Hitachi combined with India's manufacturing prowess. It's a solid combination, no doubt about it. Coming to the most important part for any capital goods firm, the order book, friends, the numbers here are truly mind-boggling. As of recent filings, their order backlog stands at over 7,000 crores rupees. Just imagine the revenue visibility this provides. In the last quarter alone, they bagged orders worth more than 1,200 crores rupees. We are seeing high demand from sectors like data centers, rail, and renewables. They aren't just waiting for orders to come. They are actively winning big tickets in high-voltage direct current, or HVDC projects. This massive pipeline ensures that the company will be busy as a bee for the next couple of years, which is music to an investor's ears. Let's look at the Hisab Kitab, or the financials. For the last financial year, the company clocked a revenue of over 5,000 crores rupees. While the margins were a bit squeezed recently due to high commodity prices, the management is very confident about a bounce back. Their EBITDA margins are steadily improving as they focus on high-value services and software rather than just hardware. Also, being a debt-free company on a net basis is a huge plus in this high-interest rate environment. They have a very disciplined approach to capital allocation. For us investors, the return on capital employed, or ROCE, is a key metric to track, and Hitachi is consistently delivering double-digit performance there. What is the USLI growth driver here? It's the multi-sectoral boom. First, the Indian Railways is going for 100% electrification, and Hitachi is a key supplier of transformers and power quality solutions. Second, look at the data center explosion in Mumbai, Chennai, and Noida. These centers need 24/7 uninterrupted power, which is Hitachi's forte. Third, the EV revolution. They are providing charging infrastructure for e-buses and heavy vehicles. It's not just about one sector. They are diversified like a well-balanced folly. This diversification protects the company, even if one specific sector faces a temporary slowdown. They are essentially the pick and shovel play for India's infrastructure growth. Now let's talk about the high-tech stuff, HVDC. Think of HVDC as the super expressway of power transmission. When you need to send thousands of megawatts from a wind farm in Rajasthan to a factory in Maharashtra with minimal loss, you need HVDC. Hitachi is the global leader here. In India, they have executed iconic projects like the Raigarh-Pugalur link. This technology is a high entry barrier business. Not every Tom, Dick, or Harry can build these. This gives Hitachi a moat, or a competitive advantage that is very hard to break. As we integrate more renewable energy into our national grid, the demand for these sophisticated systems is only going to shoot up. It's a total game changer. But wait, it's not all rosy. We must look at the risks too. The biggest dud or fear is the volatility in commodity prices like copper and aluminum. Since these are key raw materials, any price spike can eat into the profit margins. Also, global supply chain disruptions can delay project execution, leading to penalties. Another thing to watch out for is the high valuation. The stock often trades at a premium PE ratio because the market expects high growth. If the company misses earnings even by a small margin, the pitay or correction in the stock price can be sharp. So as an investor, you must have a long-term nazarya and not get rattled by short-term hiccups. To wrap it up, Hitachi Energy India is a Lambi Desh ka ghoda. It is perfectly aligned with India's green energy vision and infrastructure push. Yes, the valuations are a bit mehenga or expensive right now, but for a quality company with a 7,000 crore dollar order book, you often have to pay a premium. If you are looking for a solid engineering play for the next 5 to 10 years, this stock definitely deserves a spot on your watch list. Do your own research and consult your financial advisor before jumping in. But one thing is for sure, the story of Power India is just getting started. If you enjoyed this analysis, don't forget to like and subscribe. Jai Hind and happy investing.